Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in this morning, futures were up like 14, 15 handles. Alex and I were like, can you trust this gap up? And we gave it I had 2 reasons. She had another 3 altogether. We had about 5 reasons on why there was enough of a formula for the gap and go. You had negative sentiment across the board. Every trader pretty much threw in the damn towel for what could have been a Santa Claus rally, because it did take a long time, and the frustration was setting in. I've been frustrated. A lot of people have been frustrated, but that's what the market does. Tries to leave as many people frustrated so when the train leaves the station, you don't act quick. But I'm very proud of the what am I going to say? The chat room and the community, because everyone really switched gears pretty quickly. I know Sperling, a few guys came in short, and you had a window in the first 30 minutes to cover and get long and switch gears. You also had it within 60 minutes. So what I want to show you is how you could have handled the trade if A, you came in flat, B, you came in short, and there was opportunity across the board. So if you look real quickly on the spiders, you will see on a daily chart, you have this uptrend. Here's the October 4th low. This is the low from that Friday of Thanksgiving. And then this was yesterday's low. Now today you had a nice powerful day, that just engulfed these past few days. So this showed some power. This day just overpowered the last 4 days. So should get you some continuation. Maybe we hit this 124.79, then who knows? Maybe we contend with this resistance, but we'll cross that bridge when we get there. The bottom line is this made the trade for the next few weeks a little bit more interesting. It changes it up. I'm going to break it down one more step for you and show you the spiders on a 5-minute chart, because I had up the 3-minute, the 5-minute, and the 5-day, for all levels to see where the action was. And if you look at the 5-minute, you will see that here's what you had to do, guys. Right off the bat, this was quick. This was your 3 bars that if you were flat and you bought right away, you know what? You did it a little aggressively. You had a thesis, and congratulations, you had some decent prices. If you were short and you said, I want to wait for the first red bar and then give myself some time to potentially see if we fail or if we hold higher, that's okay too. But this was your line in the sand, guys, right here. This bull flag was the inflection point of the day. Huge gap up, quick little move, consolidation. We didn't roll over. This was your area to buy right around 123. You could have also added above the morning high of 123.15. You had a nice wide range bar. So this was if you were an uncommitted short, this is where you cover. If you were looking for a day trade long and you didn't see it coming in, because a lot of us didn't see it, I came in flat also, this is about where I decided to start putting on some positions. I saw a lot of good strength out there. And then if you look at the rest of the day, if you did buy in that area, we closed, 123.93. So, it's about $1 above, where you had your calculated pattern to buy, but it's still a better dollar in your pocket versus if you were shorting it all the way up, and now you go out like, oh my goodness, what am I going to do overnight, and just roll it up. You go back to the daily, you will see, a lot of people rolled it up from here and not sure if they were able to catch or stay involved. So anyway, this day got me long again. It held that Fibonacci number. I'm not going to put them all on the board again. Check out the morning call. Check out the blog. I put the charts on there for you to dissect. And then you had some good participation. I got long Apple with a few other stocks. It was my best one of the day. I tried shorting it yesterday, and it was really showing relative strength yesterday. So it gave me clues that today it could be off to the races. And now if you look at Apple, you will see it really engulfed this last 4-day move with some strength. You put some volume in here. Let's check it out and see if there were not much, I guess, today, but a little bit more than the last few days. But this engulfed it. If you remember, we were trying to play for continuation in Apple here before this 2-day down move, and now it's knocking right on the door of this 396. So I took home some long. I was in it most of the day. If we open up down, we could even probably get a better trade, a meteor trade, if it goes through today's high tomorrow. And then I guess we'll see how it handles, the 400 level. But if they want to keep the Santa Claus in check and they want to have people thinking positively, for whatever they want to do, Apple is a stock that, makes people feel good if it goes up, and it's something the media likes to talk about. If you take a quick look at the 5-minute chart, I'll show you where I bought it. First of all, right here was the pivot. This was 385, which it opened above, and then really this was your 388. This was like if Apple was going to be really, really bearish, or was only going to be a crappy bounce, because sometimes it's shortable, it would never have taken back this area that it broke down from. So that was why 388 was my little pivot there. So if you go to your 5-minute chart on Apple, I actually bought in this area. Okay, actually I missed this, and I bought really when it broke above this high. Wasn't a great looking trade to do. Okay, and then I added again right here. Okay, right when it went above this 391. So you had to be pretty quick with Apple. Unfortunately, it didn't give you the proper flag, but it didn't pull back at all. Like you saw, it's like nudging and nudging and nudging higher. Well, if you go back to the spiders, spiders were really going sideways and not trying to or lean long or giving you clues it was going to go up. Where Apple was just like, you know what, I'm out of here. So this was like buy area 1. This was buy area 2. I sold some as it broke through the 50-day, went back to a little bit smaller. Then I held small the majority of the day. And then a little bit on this pullback, I figured it's going to close strong. I bought a little bit more, and I'm going out tier 1. And then tomorrow we'll figure out if it gaps up or, if it does some downside probing. We've seen these the strong closes and the gap downs the next day. Maybe this 394 will be a level to watch if that happens. 393, and then I'd be really worried if it were to break the 50-day moving average. The 50-day moving average on Apple, which it powered through, was right around here, which is, for my blind eyes, 391.90. If Apple's going to be good moving forward, it should not break below the 391.90 and give back a third of today's move. So, that was a good trade that we all went for. That was one of, the ones that showed relative strength. Google I also bought because I didn't own, unfortunately. And it didn't really give you much traction. I think I was up net $1 or so in Google because there was no really intraday action. But on the chart, on the daily chart, this looks like it's ready to go. Not much opportunity today. Everyone knows this is my 2012 stock of the year. If you look at the monthly, it still looks really, really good. I think if the market says or gets the green light that it's really going to go, which it could continue. This is something that breaks above this level with some volume. Maybe it needs news. I'm not exactly sure what. But this thing should see, the old highs here of at least 750. And this weekly and monthly chart really looks good for next year. As far as, the OIHs, nice move off the lows. The materials, nice move off the lows. Even the banks, they tried to pull the banks in, which is something I spoke about. And I went after a few of the laggards. I went after Goldman Sachs. Goldman Sachs actually gave me the biggest intraday move, and it was, and obviously it's a beam down sector, so it shows you how you could time it. If you look here at Goldman Sachs, go to the daily, you will see not much here, but it opened above yesterday's low, and then it just kind of closed above yesterday's high. So that shows you that it could continue a little bit more to this 93 to 96. Can't really see much here. I guess you could say on a macro level, you have a bit of a double bottom, and it's still higher than this, but I'm not going to even go that far. Let's see if there's not really an area like this, but it could hit the 93. What I want to show you is my 5-minute chart, because that's what I used. Stock opened up, okay, and they brought it lower. Every bear out there said, you know what, I got to bring down these financials, otherwise, I'm toast. So here was really where, it reversed, held part of the gap. This is where I somewhat got involved. Right around here, right around this 89, gave you a nice move back to the highs, okay, and couldn't get through. And then in the afternoon, gave you a nice little trade here, right? This is the afternoon high. This is your pullback. This is your consolidation all day long. And this is your continuation above 90 for what, wound up being a really nice move. It came in a little bit at the end of the day, but, here's trade number 1, and here's trade number 2. Okay, I actually did trade number 1, sold some, held some, bought a little back, and then I went out probably, a little less than a tier 1 in Goldman Sachs. JP Morgan, I'm sure looks very, similar, where if you look here, as far as how could you do stuff intraday, this was your move off the open. Then you had a nice sideways consolidation all day before breaking above 32 at 2 o'clock. So it absorbed this nice move off the open, held the gap, and then continued above 32. So, gave you, not say a blockbuster move, but it gave you a little bit of follow through if you were looking for that. Gold, was quick, didn't do much for the rest of the day, but it usually does stuff on the gaps. It on the daily, if you take a look here, not such a big wide range bar, but I wouldn't, guys like, should we take home gold short? Should we take home gold short ahead of, the 200-day and the moving average, or because it didn't break through at such velocity? I think you wait. There's It's oversold enough. Perhaps the euro bounces a bit more. I think, wait a little bit. As far as the crappy bounce, it already happened. And this has been a crappy hard bounce, after this big move from the pennant. Give it a little time, unless you were super duper thesis to be gold short, which I don't think you have to be. I also sent out a midday note about some of the laggards, that the laggards need to wake up. I talked about Baidu. I talked a little bit about Amazon. And all of a sudden, look at Baidu. Nice little, trade for the morning, as far as a little bit later. You had a nice little descending bottom pivot, and it closed pretty strong. So perhaps it tries to rally a little bit just for an active trader, just to retest this. Just look what happened here. When Baidu broke or couldn't get through this resistance, it broke down hard and then came all the way back. So I've seen crazier things. Baidu first day out, perhaps it can get to 124, which is a decent trade. And then Sino also gave you a decent trade through. Look at this. Remember we talked about this reversal, this day to take notice in Sino? Well, look at the volume, look at the reversal, held 50% of that move. And then today, you could have bought it when it was negative and then added to it when it went above, this 55.34, and it didn't give you a blockbuster move, but there was something there. Maybe it continues. So all in all, you're going to have stocks that could do oversold bounces that you have to measure some of that move. What's the easy move? What's the harder move? Then you have more quality stocks that got beaten down the last few days because people lost faith that the market could move. A lot of people did. I actually got out of all my momentum shares and trades and said, I'm just going to day trade. And then today, they suck you back in. I do think there's even a chance IBD puts us back in a confirmed rally in the big picture. And historically, that tends, to have higher prices or leads to higher prices. You could always switch gears. You can't always be stubborn. You can't have always a thesis that's going to work. You just have to have plan A, B, and C. You wait for the market to confirm it, and then you trade alongside it. So, tomorrow, if we're down 8 to 12 handles, I'm hoping that tomorrow we're down 6 to 8 handles. It's buyable, and then we go from negative to positive just for a normal day. If we gap up, then that's a little follow-through. You're getting paid for holding into a strong close, and then you sell some, and then we could trade it. But all in all, this shakes up the tree. This puts the market at least back on the front page where, maybe guys will have a little bit more interest. So for me, I'm going to be here through the new year. I'm going to try and, make some cash flow, put together a month, and hopefully I'll be able to guide you through. Thanks for all the emails today. I know a lot of guys, came in short, they covered, and some guys got long and they were happy about the holding. We held for the entire day. Hopefully it won't hurt us tomorrow morning, but we shall cross that bridge when we get there. You always got to trade with the good book. And lately the good book has had some chapters that are maybe being rewritten. But I do think it's just, the timing, it's just the space we're in, it's just the calendar, that the rules, are the rules and they make sense. And really it's just all about your discipline. What you can handle, what's your time frame, what's your risk tolerance, and just trust your instincts and build on what you do best and just work on your bad habits and what you do poorly. And then 2012 will be a much better year for you. Scott Redler, T3 Live, the recap. See you tomorrow at the morning call. Have a good night.